I'm going to call it propaganda because straight up, that's what it is. I said, if you want to continue getting business from us, you'll stop that immediately. What is the one thing that they need to do? I would say this, and I hope this gets clipped. People want to see you do well, but not better than them. Hey, it's Julian. We're back for another episode of Lost and Founders, and today I'm here with a very special guest. Introduce yourself.
I'm Rory McGrath from Aurelius Capital.
Mate, so good to have you here. Thank you for making the trek down.
And one of my favourite people in the industry.
Thank you, mate. Thank you very much, and likewise. I want to start off by kind of talking. You recently got given a trophy. It was by a marketing company, right?
Yeah, Brandon from Where You.
Yeah, and
picked it up yesterday.
I saw that and I was laughing. It was like best LinkedIn keyboard warrior or something like that. But I feel like of anyone who isn't just a keyboard warrior, you could probably back it up with your boxing background as well. But
not many people realize that side. So once they know, I'm going to start posting some. I'm just about to start training again, so I'll start posting that, and then hopefully that'll shut the rest.
But look, I think like when people meet you in real life, they're often like a bit, they're kind of like a bit surprised because they're like, just think you're this super like intense guy all the time, but you're actually a very normal guy. You're a very hard worker. You got a great work ethic. You know, you run a great business. You're training and mentoring more junior brokers, trying to teach them the right way, all that kind of stuff. And the way you've grown, you and Samara, the way you guys have grown the business in such a short space of time is very, very impressive. And I think like the LinkedIn stuff and like social media, there's a certain amount of time that there's a lot of people that are faking it online, right? There's a lot, you know, and there's a lot of people that are just posting generic content, stock images, you know, and
scheduling posts to go out. Then it doesn't make sense when it goes out.
Yeah, they miss the context window.
Yeah.
And you know, from my point of view, it's like the guys that we're seeing do very well on social media are the ones that are just speaking the truth. Like I'll talk about, like, I've had Bora on the podcast before. Bora is a guy that just like is just authentically himself, just talking about like his background, his history, all this kind of stuff. And he doesn't care if you don't want to deal with him because you're like, I don't want to deal with the guy that used to gamble and do drugs and whatever. And that's fine. You don't have to deal with him. But there's a lot of people that respect him because they're like, you know what? At least I know when I'm talking to this guy,
he's like, real, authentic himself.
And he's not putting on a fake version of himself. What I see is actually what I get. And then there's guys that do like very differently, but still authentically themselves. Like guys like Tom Hawley. Like Tom Hawley will put on a rant about inflation and the government policies and all that kind of stuff. And he's spot on. He's very well researched when he's speaking. And I think people like that. I certainly like that type of content because if I see another RBA update on LinkedIn, like I'm going to lose it. Like leave that to the news because it's going to be plastered all over the mainstream media. It's going to be all over the radio. Everyone's going to get those things. Like I don't think if your network is like other colleagues from the industry, I don't think RBA updates are like the best.
I speak about it all the time. It's just like if you look at all your connections on LinkedIn, half of them mortgage brokers, all their other connections are mortgage brokers. And I'm like, your target audience, first home buyers, aren't on LinkedIn.
Yeah.
They're on Facebook groups. They're on community pages.
Instagram, whatever. But like,
I don't want to see 30 RBA posts and half of you have scheduled them and they're all wrong because the RBA has held or the RBA has gone up or down. No one's holding this last ball. No one knows. People just think, though, oh, I know.
Yeah, well, the funny thing that I've seen is some brokers will make a really bold prediction and then when they're wrong, they delete the post.
Yeah, and I'm fast on them. I'm like, where you going now, bro?
But you know what? It's funny watching some of the interactions online. And I think LinkedIn really, like, I don't know if it's a thing now, but like rage baiting, right? But some people are just so, I don't know if you want to call it delusional. They like have this distorted perspective on the real world, and then you have guys like yourself that just post and say exactly what you're thinking, and you don't have to agree with it, right? It's like everybody's entitled to their opinion, but
want debate, and I always say that. I challenge people. I want your side of the story. If I'm wrong, cool, call it out.
Yeah.
Tell me. Let's have a debate. Yeah. No one wants a debate.
Yeah, because oftentimes it's not coming from a logical place. It's coming from almost like a bit of an emotional place where they're trying to present a point. And some people are just way more pragmatic. Like some people are glass half full, some people are glass half empty, and some people are somewhere in the middle where they're just like, yeah, there's 250 mils of water in that cup. It's like it's just a very different approach. But I want to, because we could keep going on this and do a whole podcast just on LinkedIn, but I want to actually dive into the origin story. So obviously the podcast, like we try and understand the origin story. Like how did you get into broking? Like how did you end up starting your own business? What was the catalyst for that? And you probably have to go back as far as you need to. It could be early life that kind of led you down a path, and then that path led you to another path, and you were at a crossroads. Like give us the background.
I guess I dropped out of high school, hated high school, always wanted to do business, tried multiple businesses, failed them all, like most of us do. Started going down from a very young age down a bad road. Don't need to touch too much on it, but gang related, everything like that. And I got to a serious point in my life where I had to either, that was where I was going to stay, or I was going to take this new path, and that's where I went. Took a new path, moved here 5 years ago. Really had no choice to move. It was kind of like life or death type of situation. And here we are today.
Keep it closer, yeah.
But yeah, always interested in business, especially finance. Was dumb as dog shit, so I couldn't become an economist or anything else. Jumped straight into finance kind of out of high school.
Listen, I'm going to interrupt you there because I know you well enough to know that you're not dumb as dog shit. I'll say this. For a lot of people, especially if they're, neurodivergent or, have got some kind of ADHD or whatever, if they don't like the topic, you cannot teach them if you spent 1 million hours, right? And for me and a lot of other people, that was school. Like, I didn't want to learn a history and all this other stuff. Like I just had zero interest.
Yeah, exactly.
You spoke to me about cars, and I could literally tell you what car, before I saw it, I could tell you what car was driving down the street by the sound of the engine. And a lot of people think, oh yeah, how? But like I literally watched at one point on a very specific set of cars, I watched every single video on YouTube. Like that sounds like a stupid thing, but like in the early days. Yeah, but like in the early days when YouTube, like I think it was like 2000, would have been like 2008 or so. So YouTube was like not what it is now, where there's just like infinite number of videos on a certain topic. Like there was only so many videos, and I literally watched all of them because I was just obsessed with cars and engines. So yeah, I'm just going to correct you on that, but keep going. I didn't want to interrupt, but like, yeah.
That was just like me in sport though. It was just like from a young age, I was straight into martial arts, boxing, and all I could focus on was boxing. Or like in sport, it was just like in English class, and I'm like, fuck this. I don't want to learn about history or English.
Shakespeare.
I barely can write anyway. Like, I want to just like go do sport or go play rugby. Sucked at rugby, by the way. Like, because I'm from New Zealand doesn't mean I'm good at rugby. People was, oh, you're good at rugby, played rugby? No. First game, I ran down the wrong side of the field and scored a try for the other team. My coach was running like down the side, like, where the fuck are you going? And I'm like, bro, I've got clear way, everyone's sitting back down there. But yeah, I was just, it was only months ago that I got diagnosed with ADHD, and I was like, shit, I should have really done that like quite earlier on. I'd probably be retired by now if I did. I think getting into business, there has to be a little bit of delusion there, but there also has to be everyone I meet's on the spectrum, I reckon, or has ADHD.
Yeah, I think it's more prevalent than most people think. And look, some people use it as an excuse, and some people will find a way to harness it. And there's a lot of a lot of reasons that I am the way that I am because, like, yeah, there's certain traits that I have that other people don't have. Like, that's sometimes the drive, sometimes it's the discipline, sometimes it's the ability to fixate on something until like I get it done. And again, for a lot of people, they're just like, my life's so hard because of this, but you've done something about it. You've gone out of your way. You've built a successful business and you're growing it. So
in a very challenging industry as well. Like,
yeah, it's quite saturated, right?
Lots of competition. Well, maybe lots of competition, maybe a small percentage.
Well, there's
It's actually
lots,
doing
lots
something.
of potential competitors, but you know, there's a very small percentage of like the top guys and girls,
Top 1, the top 2% in the industry. Yeah.
and they account for a large percentage of the deals that get written, and then there's a lot of people that just like, and there's nothing wrong with this, right? Like some people are just building this to have a good lifestyle, and some people are really trying to build like real enterprise value and like, you know, gain market share, and there's no right or wrong way, but it's in a sense that there was some kind of stat that was like, I don't remember exactly, but of the 22,000 brokers that are in the industry, something like 5,000 of them hadn't written a loan in the last 6 months.
Yeah.
Which is massive, right? Like it tells you that, you know, for some people, it's like maybe they're an accounting firm that dabbles a little bit with when their client really asks for a loan or something like that. And then there's also some that, you know, got the accreditations, got the aggregator relationship, and then like really didn't do anything with it, or they abandon it, but they're just like maintaining their memberships and everything else.
Yeah.
To just in case they want to come back to it. There's some people that are in the first 6 or 12 months and haven't really been able to, you know, write a deal yet. There's a mixture of people in there, but it's quite a lot for the amount of, you know, people that have mortgages in the country. It's as a ratio, it is quite a saturated market. Probably in other industries, you see less players, and each one of them represents a larger share, but there's a really long tail. And so really a business that's trying to grow at a rapid pace is not really competing with the guys that are writing 1 or 2 deals every 6 months or one deal a month. Like that's a totally different market and a totally different.
Even with us right now, like we're not looking at anyone. Like we've got our 10-year goals already set out, and we know who we kind of want to look like near there. But we're not looking at anyone when we're doing this. Like that's where people fail. I think they're trying to. Chris Williamson said it on a podcast a while ago. It's like people need to. What was the quote? It was like. Model the rise, not the like final destination. It's like everyone's like looking like yourself, like right now. It's like they didn't see all this work for the last 5 years go into it. And that's where people should be trying to model. They shouldn't be modeling the result. They should be modeling how did Julian get there? How did I get there? How did anyone successful in any industry get there? So they're seeing the final result, but they're not seeing all this work here. They're trying to like become that person now.
And it's so true, because like a lot of people, like there are a few comments like they get, oh, like, you know, and they're being nice, like they're just like, oh, you know, you got to have a trophy room now, or trophy, you got to have like, and like because we've won some awards, right? But I just reminded you know, people that we didn't win any awards for the first 3 years, and we entered all of them, you know, because I see value in that. There's an element of social proof. There's also an element of credibility that amongst your peers, and recognition amongst your industry peers. And for us, where we're looking to license software to other businesses, like for us, the awards are worthwhile, and they're meaningful. And that, you know, but we didn't win any for 3 years, and we entered all of them. We put in all the work. You know, we got close but no cigar for 3 years, and then we started winning awards, and then we started winning quite a few awards. And you know, people like will make jokes and be like, oh, like another one for your trophy cabinet or whatever. But it's like, yeah, as far as I'm concerned, my team deserve it. And it's not that like, and I'll be honest with you, like in those first 3 years, there was probably some stuff that we were doing that was more impressive than now. Cause like we pioneered a lot of stuff very early. These days, when you talk about AI, like everyone's like dabbling in it and they've heard AI and blah, blah, blah. Like we're 5 years in. So for the first 3 years, there was no such thing as ChatGPT. Like it didn't exist, and nobody was doing AI in finance broking. Like we were the first and the only ones.
You got a lot of slack at the start as well. People, what are these guys doing?
I'll tell you a funny story. There's a dude that got up on stage at an aggregator conference and did a presentation about how good his business is, and that he was like a speaker, and there was like, he was one of their rising star brokers or whatever. He gets up and he says, oh, there's a lot of players out there that are talking about doing AI in finance broking. Let me tell you, that's not even a thing. And then at the end of his presentation, and I was like, all right, brother, you have no idea. Anyway, it gets to the end of the presentation. He's talking about what's coming in his business. And then it made sense. And he's like, oh, and we're also working on AI, in our business. Like, so you just said AI in finance broking is not a thing. And then
right at the end.
And then right at the end, you said, oh, we're doing it. And I don't know if it was like a strategy for him to say like, we're going to be the first ones, but like, it was like a very small thing that someone said that it's like, good. Like, I want that. That's fuel for me, because one day you're going to see that you're wrong about that. And as it turns out, he was very wrong about that. But that's what happens. There's going to be people that ridicule, like, what the hell is .ai? And there's going to be all of that.
A lot of people across New Zealand and Australia hate success, hate seeing people rise. So especially here in Australia, tall poppy syndrome exists everywhere. It's like no one wants to see you succeed in some form or shape.
Well, you mentioned Chris Williams, and he's got a few good quotes on this, and I've heard some podcasts, but even Alex Hormozy as well. He had one that spoke about like people want to see you do well, but not better than them. Mm-hmm. And because what happens is every time they see you doing well, what it does is it's like holding a mirror in front of their face and showing them like what they could have been if they just were disciplined and did put in the work and did everything they said they were going to do. That's it. Like, I don't have any superhuman powers, right? As far as I'm aware, no one does. So it's just I have the ability.
Like us, like me, you, Bora, all of them. It's like most of us dropped out. Most of us, took some wrong turns in life, but we're here.
Yeah, and we you did that through grit, determination, discipline. You did pivoting. It all that, like pivoting. No like shortcuts, no handouts, nothing. It's like, and all the stories are very different,
Mm-hmm.
But
you've got to be delusional most of the time as well.
Yeah, a little bit.
It's delusion until it works, though.
That's right. It's like an unshakable confidence.
I heard that ages ago. I was like, oh, fuck, what are you talking about? But now I'm like, okay, it takes a lot of delusion and grit to just wake up every day, especially when yesterday absolutely punched you in the face. And you got to wake up the next day and go, okay, let's just do it again.
Yeah.
And then that day might punch you in the face, or that might be the worst day ever, but you still have to get up the next day. Especially when you've got staff, you've got payroll to meet, you've got bills to pay, mouths to feed. You feel a little bit sick in the morning. It's just like, cool.
Gotta go, mate.
Onto it, like.
Yeah. But you took some wrong turns. You end up down this path. Like, what is it exactly that you did? Like, what was a key decision that you made where that's ultimately resulted in you being here? And I'm sure there was like stepping stones along the way, but talk us through it.
If we go back to New Zealand, and I talked a little bit about it on my podcast, but yeah, just obviously with the wrong crowd in New Zealand for quite a while, all my life. I grew up in that life. A lot of people that are, privileged kids go into that life thinking they want to be a gangster or they want to be from the hood. And, you're from the hood, you understand what other kids grew up like. And I grew up that way. So it was just like, that's all I knew for a young age, even through high school, primary school, everything. And I got a phone call being like, there's money on your head. And, that was a life or death situation. I went, okay, this is bad now. This is time for me maybe to stop everything I'm doing and go. Because if I don't go, I'll just be another number. And within a week, I packed up, me and my ex-partner, and we moved to Australia and never looked back. That was during COVID as well. So when we got here, we were locked in quarantine for 2 weeks in a hotel.
Yeah, wow.
Couldn't even exit. We had, COVID tests every 2 days. And then, just sold everything before moving within a week. Had a truck still on finance with my old company. And I was like, just handed it to a friend. I was like, hey, have this, and had to go. So had to literally start from ground zero again here. And then from there, it was just grit. Just, got a normal job to begin with, didn't know any connections here. And then slowly but surely made my way back into finance, kind of went into self-managed super fund, got my RG146 pretty quickly here. I thought I was going to jump back into property because I was doing property development for myself in New Zealand. Just decided it was way too much red tape here. And then, had the opportunity to become a broker again. Worked for a well-known firm that's based in Melbourne and had a Gold Coast office. Did well there, but just not a good work environment to be around. Dodgy brokers, cowboy brokers in the industry, stuff that I didn't want to be around. And then it got to a point where lenders were approaching me being like, you need to get out now. You've got a good name currently in the industry, but if you don't, it's going to be tarnished. And I went, all right. So my fast forward a little bit of time after that, I was went on leave for my baby, for Mila to be born. And I was sitting in the hospital room, I think a day after Mila was born, so still in the birthing suite. She was asleep. Mila's mum was asleep in her bed. I was on my laptop. It was like, gosh, it would have been like 11 o'clock, maybe at night. And I had my EA that was working for me at the time that was supposed to be covering all my deals at the firm. And I rang up being like, hey, how's my deals going? Because obviously I'm commission only. And they're like, oh, you're meant to be handling them all. And I went, just had a baby. Like, I need time off. I need to look after the family. And then that was the split decision I made to go, okay, bugger this. So I rang Samara at the time and I said, let's register the business right now, and let's just go. Yeah, that's how Aurelius Capital was literally started in a birthing suite.
I love the name. And one thing that's missing from my shelves, I just realized, is my book, the Stoic books. I've got a book collection. Obviously, there's meditation. Marcus Aurelius' Meditations, which are one of my favorite books ever. How did you come up with the name?
I sat there for a while and I was like, fuck, what do we call this? What do we call it? I sat there for hours and I was just researching. And I was researching like how banks, overseas banks in Switzerland and stuff, operate and move money. And it came up with a lot of these big banks were like, were Latin names. So I was like, just started searching like powerful Latin origin names and Aurelius popped up. And I was like, Marcus Aurelius on one hand, but it was obviously, based on gold and prosperity. So I was like, okay, that's pretty cool. And I was like, let's just put capital on the end of it and bang.
Yeah, great. It's a great name. I love it.
Yeah.
And so you kick off and you're doing quite a bit of like private lending and asset finance. Like how tell us about all the different things that you guys do.
Yeah, so we're a full service brokerage. So we've got obviously consumer and commercial. We're heavily commercial focused though. We've got currently only one broker that handles the consumer. Our philosophy in the business was I'd rather be full service, especially with the economy and how it is, to go, if we're doing kind of everything, but everything well, if one area is slow, let's say commercial or, mortgage, at least we've got other pillars that we can lean on.
So it's consumer and commercial asset, and then resi and commercial property.
Mm-hmm. Yeah, correct.
And then also private lending.
And then private, yeah. So we've split now between Aurelius Capital Group, which is trading as Aurelius Capital, and then we've got Aurelius Private, which handles our private transactions as well. So obviously most of my experience was in private, and I've built up a good name and reputation in the private space now. But yeah, so that's how it's split. And as we grow, brokers will be put into certain areas. So, you're just a consumer broker.
Yeah.
I want you, and I tell our current,
the specialist approach.
I called Dev. I say this to Dev and our broker in that space right now. I'm like, I just want you to become an absolute animal being a consumer broker. I want you to know if I come to you with a question or someone comes to you with a question, you can answer it off, straight away.
Yeah.
I just want you to become the person for asset and consumer personal. And then you've got myself and Samara that just handles all the commercial banking transactions, cash flow, asset for the business clients. And then Samara handles all of our residential mortgages. But with the mortgages, it's only for business owners, self-employed. We won't touch, first home buyers or anything like that. The market's too saturated. There's too much competition. It's a race most of the time with the mortgage side. It's a race to the bottom when it comes to mortgage brokers. It's just like who can get their commission down to the lowest. I mean, their commissions come in 3 months. There's no money in it.
Yeah, it's it is interesting because depending on who you speak to, right, they give you different perspectives, and this is one I hadn't really thought of until the other day. Obviously, I don't do mortgages at all, so it's not really my place to be thinking of that stuff. But one mortgage broker told me the other day that they focus on first home buyers because it's less likely they get clawed back as well, because the client is usually a very small deposit and very high LVR, so it's a while before they can even sort of refinance it, and there might be 95% plus LMI as an example, or maybe that gets waived actually now these days. I'm not even up to date with all the schemes.
That's what's wrong sometimes with the mortgage industry. It's just like that's putting the client in such a crap position. Having a high LVR, it's just like you can't do anything when they've got a high LVR against their property.
Yeah, and it's like the lesser of two evils of not having any property is like. But yeah, look, it's very interesting because it wasn't really something that I'd thought of, but they were saying it. Yeah, that's like why some brokers like first home buyers, and then, and obviously they like helping customers. Like a lot of them do genuinely trying to help people, but in terms of as a business model, why they focus and niche down, it's because like they can be quite consistent with their messaging and marketing, because correct, typically you have two schools of thought, right? There's the jack of all trades style broker, and then there's the specialists. Like, in our view, like we made a very conscious decision to just specialize in asset finance, and we built lots of referral partnerships. Not saying it's the only way, not saying it's the right way, but I've seen a lot of brokers, like there's an example where a mortgage broker the other day who specialist resi and tried to do a personal loan for their client, and they had got the mortgage approved for that client. That's how they had the customer in the first place, but it hadn't settled yet. And so they went to get him a personal loan as well. And the personal loan was quite a high rate. And the rationale was, technically you're not asset backed. But like a specialist asset broker or someone who does lots of personal loans like we do would know straight away that you can get that overturned.
Yeah, 100%.
That's just like pick up the phone and like that's just. But what actually happened is that customer then lost trust in the mortgage broker, because like that doesn't seem right. Like, you're doing my mortgage. How are you going to say that I'm not a property owner? Like, you literally got me formally approved and like we're signing documents. Like, we're at that stage. And so they sought out a second opinion, and the second opinion was us. And the second opinion was that we can get a much better rate. But that actually made the client not trust the mortgage broker. Now, this wasn't someone who worked with us, obviously. They were trying to do it themselves. But, what actually happened is that mortgage broker, instead of getting a specialist to work on that deal who would have known this, cost themselves the trust of a client on their core business, But I think your approach is quite good in a sense that you're going to have specialists for each product.
Correct, yeah.
So you can have the best of both worlds.
Because we looked at the risk of that, and that was the biggest risk, is like you want to niche down. Like, don't get me wrong, I always give shit on LinkedIn about, fuck niching down. Like, don't listen to what the gurus are saying. But we understood that if we want to be full service and get to where we want to be within the business, everyone has to be a specialist in their own field.
Yeah.
That's how, when you call yourself a full service brokerage, that's how I think, and I believe, and hopefully in a few years I'm right, is that's how you make a successful full service brokerage, is having specialists in different areas. It doesn't mean that broker that's in consumer can't make money off, a private transaction, because they can. It's just they're going to give it to me and they'll still get a clip of it. But I want you to become a specialist in your field. Yeah. It's like, when I get referred, or me and Samara get referred, a personal loan deal, we just give it to Dev, because it's not worth our time. Our time's spent either on the business or working on complex transactions and deals, and we'll just leave it to him, because at the end of the day, as a business, we're still getting paid regardless. Yeah, no, and it gives opportunity for that broker and the business to grow and learn, and if we're passing it all to him and he's the only person, or that person's the only person getting them types of leads and getting approvals and settlements with lenders, it's going to build their careers up with the lenders and trust with the lenders and stuff like that. Yeah. And, just in terms of where you see the brand, you've obviously spoken about, like, you've got some pretty big ambitions and stuff.
But like, where do you see the industry going? Like, what, give us like 3-5 years. It doesn't have to be specifically for your business, but like just as a general rule.
Yeah, well, for us, it's just like we scoped out the first week of launching the business, our 10-year goals. Like we incrementally did like, you know, what do we look like in a year? 3, 5, 10. And then that's why we are full service and have the mortgage side, because, you know, your business is a great example. A normal finance brokerage, if you're just doing consumer or asset, you can't really sell it. You know, once you leave or try exit, there's no actual capital type of for say to sell that business. You're just selling IP or something at that stage. For you guys, it's different because you've got the tech side of the business that you can sell for a multiplier. And that's why we decided to have the commercial mortgage resi for self-employed, is because we can grow that as our mortgage book, and that's a part we can sell. So that's where I think people trying to, you know, by going in, I'm just going to do asset, cool. But when you decide to, you want to retire or exit,
there's no
what are you exiting on? Nothing.
Yeah.
Hopefully you've got a lot of savings and, you know, you've got other investments, but most of the time you're not going to.
At the very best, you get a small multiple, single-digit multiple of your EBITDA.
Yeah.
And you know the thing is,
then all it takes is the likes of us in years to come that have the power of, because our loan book's at this or your tech side's worth this multiple, we can come in and we can start swooping on all these brokerages that are either one struggling or are just burnt out and done.
Yeah, there's going to be quite a few that are sort of ready to retire and stuff that, you know, if someone's looking, because look, when you have really good technology, it ends up being very easy to monetize your customers, because like you can have these automated touch points and, you know, the tech can do a lot of the heavy lifting. It doesn't replace the personal touch that our brokers give, but we're not trying to do that. Like ultimately we want the brokers to be having more of those personal conversations and less admin. Like that's the key thing. And I've just come back from the LMG Elite Broker Conference, and there was a debate on will AI replace brokers in the next 3 years? And so I was asked to be on the opposing side, as in the next 3 years, it won't replace brokers. And, you know, there's a lot of tasks that brokers are doing today that they won't be doing in 3 years. But what we're seeing in our business and all the automation and stuff that we've built is we're seeing a trend towards more brokers and less admin staff. That seems super obvious, but the less admin part seems super obvious, but more brokers doesn't seem that obvious. You're like, well, why? But we're going to create opportunities. We're going to create more opportunities off the same number of leads or market size, because we're either taking market share or we're personalizing. Like someone who we'd normally just do a car loan for, now we're doing car plus debt consolidation plus, you know, they want to start a business now. And so we're finding these opportunities that help us like add more value to the client. And so
it's like taking wallet. It's just like Samara preaches it because she's from banking and corporates. It's like taking full wallet share.
Yeah.
Client. We know how much it costs to get a customer in the door these days, especially in the finance industry. You know, you look at a cost per lead through Google or Facebook these days, and it's horrific, especially on Google. You know, a decent lead, especially because as a finance brokerage, you're competing with all the major banks, and I've just got endless.
And the lenders that you share, like that you send deals to, like crazy thing, like a whole, like I was just doing a Google search on our own company one day, and I noticed that like all these companies, there were personal loan lenders and other car loan consumer lenders that we give heaps of volume to. We're bidding on exact match, LoanOptions.ai. And I went crazy. Went to all of them. I was like, by the way, if you want to continue to get business, like I understand if you're bidding on the words loan and options, I get that, right? But why would those lenders who don't offer options do that? It was a marketing ploy from their team. Like their marketing team isn't necessarily from the broker division or whatever. So just looking at, you know, high keyword search terms, and Loan Options is a great name for SEO, right? And you know, sort of Google search terms, but they were bidding on exact match LoanOptions.ai. Like, why are you bidding? We're getting those leads, and then we're potentially sending them to you if they meet your criteria. Why are you competing against us?
Some of the big lenders, it's just like a lot of the leads
crazy.
are going straight to them.
I said, if you want to continue getting business from us, you'll stop that immediately. And most of them turned it off immediately and apologized and were like, no, like that wasn't intentional, blah, blah, blah. And
someone in marketing got fired.
one of the lenders pushed back and was like, no, we're entitled to do this. And I was like, all right, no worries. Let's see how this works out for you.
Yeah.
And we'll never do the wrong thing. Like at the end of the day, if that's the best solution for the client, we'll go there. But when options are very similar and maybe even we could get a rate match from somewhere else, that's what we're doing. We're like, no. And then guess what happened? They backflipped and we're like, we're really sorry about that. We never should have did that. That wasn't our call. It was this person's call, but we realized it was wrong. And then no problem. But like, you're not only competing against other brokers. The thing about lending is like you're competing against the lenders and banks directly. And in some cases, you're competing against lenders that you actually do a lot of business with. And it's kind of crazy.
And you've got the ones that are going against, the broker network as well. And
yeah.
we know that they're pushing ad spend up.
Course, and like I get served those ads all the time, like cut out the middleman and save. Like they're just creating this narrative. There's one thing I want to talk about, which I've spoken about with a few people, just to sense check it, because I've noticed it and I wanted to see if other people were noticing it, and maybe people who are less vocal than I am, right? so on a spectrum, you're extremely vocal. I'm like quite vocal,
yeah,
and then there's some people that are not vocal at all, right?
Yeah.
And so I wanted to ask.
I think about the consequences afterwards. I'm like, oh, okay, let's see what comes from this.
But I asked and I said, like, do you think it's interesting how around the same time that the banks announced all their pushes into the proprietary channels, that now there's all this, like, I'm going to call it propaganda, because straight up that's what it is. There was that AFR piece that spoke about how if brokers didn't exist, customer rates would be cheaper and all this kind of stuff. And we know that's bullshit. Like, the only reasons why banks don't have a free rein is because of brokers. Like, and credit has to be given to, like, Aussie John, right? Like, at Aussie, we'll save you, like, we'll beat the banks for you. Like, that kind of messaging is what literally helped build the robustness of the broker channel. And customers liked it. Like, yeah, why would I go to the bank? These guys are going to help me and they work for me, and the bank's going to pay their commission, not me. And on the residential side, that's kind of how it works, right? But they want the market share back, because they realize now close to 80%, 77% of all mortgages, for example, are written by the broker channel. And they're like, well, we can't have that. The broker channel is like too much power is how they're looking at it. And they probably thinking that there is going to be more disruption with AI, and they're probably going to be able to their cost to serve will get cheaper over time. But what they want to do is build their margin back up. That's why they're trying to cut out the broker and take some of that, because that if there's no if brokers don't exist, banks can have a much greater margin and charge the clients whatever, because there's no one to like keep them accountable. Like, brokers' role at the moment, one of the key roles a broker plays, is keeping the banks honest. If your rates are too expensive, they're going to use other lenders. So guess what that bank has to do? The bank has to lower their rates to get business again. And that's, in my view, in the interest of the customer. It's not always just about pricing, right? Not everything is about rate. Like, they've got to offer a good service, the product has to be good, all those kinds of things. But if all else is equal, rate does matter. It does matter, especially on $1 million loan or, whatever. But
our society is so fixated on rate as well. And that's from media propaganda, from the banks, higher government pushing that agenda. It's just like, you get a phone call from a client, the first thing they ask before even saying hi to you is, what rate can you get me?
Yeah.
That's all.
Yeah, that is, it's problematic, because there's like, so many other factors in a loan,
so many
right?
variables in the whole situation.
The loan structure, the fees, the early termination costs, like, I'm trying to help put out a fire at the moment for a business owner. And for some reason, like, we didn't write this deal, another broker did. And it was always going to be a loan that was for like 3 months maximum. And it was a business, like a cash flow loan. And he said to the broker, I'm going to use this lender. And I won't say the lender, because like, I'm working through it and I'm hoping they're going to do the right thing. Even though it's not my client, I'm trying to help this client, right? And they said, like, the broker put him to a lender that has huge early termination costs. And I was like, why did they go there in the first place? And he's like, oh, well, apparently he checked with them and they said that after 13 weeks there wouldn't be a problem, and he could pay it out.
Where in the fine print is it?
Where does it say that, you know? And I even looked at it, I got forwarded an email. I was like, that's not exactly what it says, you know? And but it's crazy. And so we're seeing this, and we're even seeing it with the dealerships, right? The recent article and news story that came out on dealerships and how they're gouging
made a
clients.
post about it, yeah.
Yeah.
Exactly.
It's pretty insane, but you know, they dragged brokers into that. Did you notice that?
Yeah.
They like, that had nothing to do with brokers. They were all dealerships that were doing the wrong thing. It had nothing to do with brokers. Of course, some of these dealerships probably operate as brokerages, so they can have more lenders and all that kind of stuff, and maybe they have their own credit license. But the reality is the foul play is occurring when people are going into a dealership and getting railroaded into a loan that suits the business manager and the dealership the most, not the actual customer. And like, we see this all the time. Like, as a broker, we're trying to get a tax invoice from the dealership. They will
They're holding fire on it a lot of times.
They'll say, oh, it's gone to a different department. Sorry, we don't do that. Like, you know, we had one, we settled a loan for a client, and we spent a week trying to get this tax invoice, and they just kept going. The customer said, listen, I'm not using your finance. It's already sorted. They would not release the invoice, would not release the invoice. In the end, we sent the remittance after we settled the deal. Took more than a week than it needed to. And they just said, well, if you want to come get your car, come and use our finance. Otherwise, you can wait for the invoice process. And that was it. They just literally held the customer's car ransom. And
that was
because
like me at the start of the year. I had a client, a returning client of mine, long-time client, purchasing 2 new NPS Isuzu trucks for his business. And they were already at the dealership, and the finance manager rings me. She's like, hey, can you send your finance approval through to me? I said, why? She said, oh, you need to. You know, we actually, it's in our company policy to see it. And I said, no, it's not. I'm not sending you it. I said, the client's approved. We're ready to settle right now. Send me through the tax invoice and we'll get this settled in the next, couple of hours, because it was instantaneous settlement. And she just kept pushing back on me about it. I ended up getting it because I said, no, you're not.
Yeah.
I know what you can and can't do, and all you're going to try and do is undercut the whole deal.
But it's not even that. It's like they just want the chaos, and they, this is what I mean. The business manager, the finance person, they give themselves an important title, a business manager, but the finance person in the dealership, the salesperson in the dealership that does finance, sent out an email after the settlement. The remittance went to them, and she replied all, and our brokers in the email trail. And it says, hey, let's say Johnny, just letting you know that that's one of the lenders on our panel, and I hope they got you the 6.48% that I told you I could get you. Like, the deal's settled. Like, what is the purpose of doing that? Rest assured the client got a better deal than what the dealership would have given them. But, like, what was the point of that? The point of that was to do nothing else other than try and damage our reputation. And it only makes them look bad. That the client said to our broker, who's a girl, he's like, I am so sorry you had to go through that. Like, please, what's your office address? Like, let me send you flowers. Like, the client was cringing from how poorly the dealership was behaving. It's disgusting. And if people are listening and they're thinking like, why? Oh yeah. Like, we've had mortgage brokers that are partners with us, right? They go into the dealership and even they get hoodwinked because they're like, oh, well, if you want the car, like, got to do finance with us. You want it this weekend? You can't. You got that trip. And they do this stuff. It's dirty as. Like, well, if you want the car this weekend, I know you got that trip that you booked from 6 months ago with your family. Well, there's no way you can get it unless you do finance with us. Now, if you're a mortgage broker and, we've already got you approved, like, we can move fast and we'll do a real-time settlement and we'll get them the money as fast as they can do it. But if the dealer is lying to you, saying that the only way you can pick up this car before the weekend
is letting us quote the finance.
That's disgusting behavior. That's pressuring somebody into a financial contract. That is illegal. There's no questions about
Especially
that.
In our world, but in their world, it's just like...
Yeah, well, they're not under NCCP. They have this point of sale exemption. It's I pushed ludicrous.
On it. Like, I remember I made the post 6 months ago. I literally tagged ASIC in the LinkedIn post. I said, when's ASIC going to start doing an overhaul on dealerships?
Yeah.
And a week ago, bang, ASIC's doing a review now. Let's see how hard ASIC comes down on the dealerships. I mean, Volkswagen,
but
a few years ago, had the same thing, and they got fined a lot of money. they've improved now. I'm personally with Volkswagen on my vehicles. They definitely have improved, but not where they need to be. A lot more improvement. But you can't test drive a car at any dealership until you've seen the finance manager these days. They literally push you into the finance manager's office.
Yeah.
And then go, okay, all the aftercare, what do you want?
Yeah.
It's like, I don't want it. Oh, we'll throw in the floor mats. I don't want fucking floor mats.
The crazy part is they did drag brokers into that, right? And the propaganda part I was talking about is like they're going to use situations like that where they drag brokers into it, and a lot of these campaigns would be, and all the media push behind it, it'd be funded by the banks that are trying to take out the brokers. Even though it's the dealers in that case doing the wrong thing, they did include brokers then. It's like, man, which broker's doing that? What the dealership's doing? It's like these are unconscionable contracts, and they're literally left unchecked. But they'll drag brokers into that because then they'll make a villain out of us. And like, yeah, if you see, this is why you're paying so much your interest rate. Like, stop using a broker, start using us directly, cut out the middleman and save. Like, this is the exact framework that they're using to slowly like degrade the trust of the brokers. And man, you cannot underestimate how much money and how much power the banking lobbies have. They have an enormous amount of power, and they have the ear of the government and the regulators and all of it. So, that's my concern. I'm flagging it now because people need to be very in tune with this. And
one of their majors is not even using it under their main brand either. They're using it under a sub-brand, and they're pushing that narrative of cut out the middleman. No one realizes.
Oh, I think we've spoken pretty at length about it. And, but all of the banks now are bragging about how well their proprietary channels are. It's not just the yellow bank, it's all of them now, pretty much. And they're all bragging about it, and all their shareholders are expecting them to keep reporting on how their proprietary channels are, because they've told them that these proprietary channels have better margins. And but to the customers, they're saying the opposite. So to shareholders, they're saying proprietary channel gives us better margins. And then to customers, they're saying cut out the middleman and save. Those two things can't be true at the same time. It's either higher margins. You can say, okay, well, it's just they're getting efficiency. But what's the approval rate from submission to settlement for a broker? It's got to be in the 80% range.
Yeah.
Brokers are doing a lot of filtering and a lot of quality assurance checks before the deal goes to a broker. So what's versus online leads? I know, because I have a business that does dabble in online leads versus referrals from mortgage brokers as an example. And the quality is 10x better and 10x cheaper to serve. So, yes, you have, commissions or referral fees or whatever to pay out, but the reality is it's 10x better, and it costs only a little bit more when you factor in cost per acquisition and all that kind of stuff, total leads that you're generating, cost to serve each of those leads with phone calls, emails, all that stuff.
And I laugh, even with all the marketing agencies. I mean, both of us get head up on a daily with marketing agencies. Oh, we can get you the best leads, and I'm like, okay, well, we're doing 25, 30%, conversions. And I'm like,
yeah, fuck off. Yeah.
That's
crazy.
When we run the numbers, because we've just hired a new marketing manager internally now, because I just couldn't do it myself anymore. And we're looking at 12% being good, pushing potentially 15 if we're lucky, but show me 30. And I've called out that, the guy that's my arch enemy on LinkedIn currently, that marketing guru, he's like,
that guy's a fucking leech, mate.
Yeah.
He's a worm.
He's a dickhead, yeah.
I've called him out so many times.
He's been posting me.
I called him. He once posted something when a few of his clients were wanting to use the loan options widget. He once posted a blog, and it was a negative SEO thing. And all it was trying to piggyback off our SEO and our brand. But then he was trying to sell his solution. So anyone looking for loan options would then make the association and click on his thing, I rang him and said, mate, you got fucking 10 seconds to take that down because that's defamatory. You're saying things that are just outright wrong there. And he was trying to say it was not compliant and all this kind of stuff. And he used to be an auditor at ASIC. And I was like, no worries.
We've had the largest loan book in Australia.
That guy is a fucking worm, an absolute parasite.
I actually had to message him about 3-4 weeks ago because he started to screenshot my LinkedIn posts and post them in his own Facebook communities. And I said, do you want to go down the legal road? Because I will with you. Like, at least give me the chance to defend myself on a post. That's what I don't like about LinkedIn, especially in our industry. People will make posts about someone and they won't let that person back themselves up. And I'll say this. I'll say this one on the podcast is, take Jack Henderson. You know, he has some good parts, but he also has some shitty parts, and he's caused a lot of grief right now in the industry when it comes to using trusts, right? Yeah. But I see everyone on LinkedIn making posts about him, and everyone knows these posts are about him. At least tag him. At least give him a chance to tell his side of the story. So on a post, I did that. I tagged him and I said, do you want to explain yourself?
Yeah.
Because I don't want to be put in posts and not have the chance to defend myself.
Well, somebody did that to me on the BDM AI thing, you know.
From example,
And they posted it, and, you know, like, I mean, it's so obvious they were talking about me because the article had 3 opinions, right? And I was the only one in a direction that's saying, BDM jobs at major banks are at risk. And I explained all the reasons why. And if anyone actually read the entire article and didn't just read the headline, they would have come to the same conclusion that I did, that, everyone's job is at risk. And the major banks are trying to find ways to cut costs and improve efficiency and increase their profits. And BDMs, if they're growing their proprietary channels and they're relying less and less on the broker channels, where do you think that goes? Like, that means less BDMs. It doesn't mean no BDMs altogether, but some BDM jobs are at risk. And then you couple in the fact that BDMs are so busy taking brokers out for coffee and meeting them and all this kind of stuff that they can't answer the phone to do an urgent scenario with a broker that needs to know now because, like, he's got the client with him, but, you know, an AI chat that's got all the lender policies and can do perfect recall of that lender's entire credit policy and answer questions better than that human could, and 24/7, like, where do you think this goes? Like, maybe it's not 0 BDMs, but certainly less.
Well, BDMs start, you know,
doing other things,
utilizing that technology to help them in their role.
Yeah, but that was the same thing. Didn't say, like, there's literally a photo of my face, but didn't tag me or didn't say, can you please elaborate? Nothing. It was only because people started sending it to me. And even when I posted,
that was like my stuff, and I'm like, at least give me the chance to jump in there and tell my side of a story, or have an open debate. And a lot of my posts on LinkedIn, I'm actually, yes, in most cases I am rage baiting you, because I understand how LinkedIn works and the algorithm works now, and I've mastered that. And off the back of that, yes, it doesn't get us leads for the business. It gives us opportunity, B2B opportunity a lot of the times, i.e. even this right now. I mean, we met face-to-face a year and a bit ago, but most of the time it's just come from building that relationship directly off LinkedIn. But I've got a good relationship with a lot of the top BDMs, like we all do, but there's still a lot of BDMs out there that just don't answer their phone. Or don't even text. But like, I understand if you don't answer your phone, but at least send me a text straight away going, especially when, you know, there's brokers that send phenomenal deals that are ready to go. Send me a text. Hey, I'll call you in 5. Can you text me what you need, or email me? I'll jump back on it straight away. They don't even do that. That's the BDMs I have a problem with. Well,
the crazy thing is the amount of private message, and I wish they would be public. I wish they would, because at some point people need to grow a backbone and actually stand up for the people that are, like, I didn't say anything with malice. I was asked a question by a journalist. We spent 15 minutes on the phone. The 15-minute conversation got condensed into a couple of quotes, right? And I ended up making a post about it because that particular person used the mental health play, like, are you okay day, etc. And to me, that's problematic, because, like, I truly go out of my way to make sure that my team and everyone around me is always has their needs met and always well taken care of. And I treat people with so much respect. Nobody
on a daily basis as well.
Every time, 100%. Not on like once a year. 100. I care so much about the well-being of the people around me. I put everyone else's well-being before my own. Right. I work my ass off to make sure everyone has what they need. And anyone who knows me knows that I would never say anything malicious to hurt somebody's feelings, right? And I've had previously really good interactions with this particular BDM, but it was just like, maybe it was a bad day or whatever. And so like, always cut people slack. But I decided to make a post about it, but it was like a bit of a storm in a teacup. A few people sent me that and they're like, oh, like, you know, she's going after you, whatever. And I was like, I commented initially and I was going to leave it at that. And I was like, you know what? No, because like at the end of the day, if somebody's going to call me out, I am going to defend myself, because I've worked 14 years to build this reputation that I have, right? And if someone's going to like try and not cancel me, but someone's going to try and take away from everything that I've done because of like a news, like an industry article, that is not wrong. And I bet you right now, if any BDMs want to challenge, I will put my AI BDM up against you on your own credit policy, and I promise you won't win. Yep. I promise you won't win. And it's not being mean or rude. It's like your skills as a BDM are your ability to make the brokers feel supported, loved. You need to be responsive. That's the key part about it. It's not just like your ability to regurgitate credit policy. It's not just that. And so I was asked, what can't the AI BDM do? And I said, and I think this is where she took issue. I said, it won't be able to take the brokers for coffee. And like, that was not like meant to be taken in the wrong way. It was like, it was implying that it's not going to have the same kind of personal connection. It was like, oh, is that all you think BDMs do, is take brokers for coffee? It's like, that's not what I said. But like, people will try and put words in your mouth, and like, I have the right to defend myself. And so if someone is going to call me out, or someone's going to talk shit about me, tag me, you know, to your point.
That's what I said.
Yeah. It's only fair, right?
And I mean, Samara can contest to this. I'm not scared of anyone in the industry. I've had this conversation with you before, and Joseph from It's Simple told me the other day when we had a meeting with him. He said, no one will want to try cancel you, because that will just give you fuel to go even more. And I think that's why, because I'm always at risk of getting potentially accreditations ripped up because I've pissed off the wrong bank or lender or anything. Prime example, yesterday I posted about banks thinking they can do Black Friday sales.
Yeah.
Which, it's not illegal, but it's morally and ethically questionable. It's just like, this is not a Harvey Norman, TV.
Yeah, we're talking about financial contracts here.
And in that case, with being it's a bank doing mortgages, it's 30-year commitments you're looking at, and you're acting like it's a clearance sale for the weekend. It's Black Friday in retail, but it's not Black Friday sales for a fucking mortgage. And that was my issue. And I had a broker actually challenge me on it, and I said it exactly that. This is not like, this is a financial commitment, and this is actually going to push some clients into a worse financial position, but it's also going to get the greedy brokers to be like, oh, we should refinance you to this bank. What, just because there's, a cashback offer or something along their lines? And that's what I have a problem with. If it wasn't for Samara, that bank's name would have been on it, but I had to black the bank's name out. So
With Samara's doing God's work over there.
I can see Samara in the corner just looking at me.
Well, look, there is a balance, and I'll tell you, there was a time where I was very outspoken on a very global issue, and I was very outspoken. And I'm talking about the COVID era with lockdowns and other bullshit that was going on. And I was very vocal, and I was very supportive. Like, there was people from the industry that were getting fired from their jobs and shit like that there was one point in time where someone who I respected said that they may exclude some people from their industry events if they didn't take the vaccination. And I called that person out, and everything's like sweet, everything's all good since then, right? Like, we squashed the beef. But it was very important to me. I'm like, if you're going to exclude any of my team members who've made a personal medical decision to not have the ability to go to an industry event and do professional development because you just want to virtue signal that, I was like, no. And that could have cost me not just one accreditation. If you can't have an industry membership, you can't have any accreditations. And there's been times where I've called out people, and So it is a dangerous game. I will say that to you. It is a dangerous game, but at the end of the day, you've got to do it the right way and show that you're doing it for the right reasons. And I think like ultimately you are. Like what you said, there was absolutely nothing with what you said. I think the fact that you do it a bit rage baity makes some people like, oh my God, we should take him down. He's like, they feel like you're getting more and more powerful because like more and more eyeballs are.
Yeah.
and that's like a weird thing because like people, I posted about and called out some aggregators about not wanting to collaborate and stuff like that. My phone rang and it was like, it was shocking to me because like people were liking the thing, but if you take a look at that post, not many brokers liked that post. There was a handful, and
diehard supporters.
But the reason they didn't is because they were worried that like their aggregator's going to see them like it, and literally I had people call me, like aggregators called me, like, is this about me? Like, is this is this that? Like, what is it? And like the ones who called me, it wasn't about them, but like it doesn't matter. At the end of the day, if you think about it, if brokers are too scared to like a post because they're worried that, like, they might agree with it. And I tell you, for however many likes there were on that, or you look at on that post, I reckon I had 3 times more DMs. And some of those DMs are like, they would scare aggregators because like some of those DMs are like, fuck them, they're absolutely fucking useless and blah, blah, blah. That's not my perspective. My perspective is some of them are just a little bit misguided. They feel like that if they collaborate, they're going to lose control of their little patch or whatever. But the reality is, if you're an aggregator who is adopting all the latest and best technology, the brokers flock to you because they're like, oh, wow. And there's a reason why some aggregators are at the top and are the biggest, because like if you take note of those ones, they're like the ones that do integrate with the new technology or do buy new tech and do implement it and do it like reasonably quickly. And so brokers are, when they're building a brokerage, they're not just betting on who's offering the best of like solution today. They're looking at like, who am I most likely to be aligned with in 12, 18, 24, 36, 10 years, whatever, 26 months, 24 months, 36 months, or 10 years. They're looking for someone who, because it's so hard to switch aggregators and you might lose some of your trail, or like you might, the CRM migration's a nightmare, like all of that stuff. So like if you're not collaborating, it's very simple. Start, because you're going to make your existing brokers more sticky. And if they don't want to use the products, they don't have to. Like, we're not forcing our products down people's throats. I'm not saying you have to use us. Like, it's just nice to open up your APIs so if brokers do want to use it, they can push information in without having to double key it.
Exactly. Yeah.
And my point was, if you're a broker and you can't see that aggregators that don't allow that sort of connectivity, that's not looking out for the broker. You can't say that you're supporting the broker and you're all about the broker if you're like making the broker hire way more staff than they should need to if the systems all talk to each other. It's not even like we're trying to pull data out. Like, we're just trying to push data in for them. Like, we don't have access to that data. We push it in and then it's theirs. Like,
we've
it's just
experienced
silly.
that, months ago. It was just like we were trying to set up, API integrations into it and into our aggregator, and it just wouldn't work. It would just be breaking all the time, even just simple Zapier connections. And I'm like, because the Zapier connections were instantaneous Zapier connections, and that wouldn't be working for what we needed. So it was just like, it was just misfiring and sending error messages the whole time.
Well, if I had all the aggregators in this room right now and they told me what is the one thing that they need to do, I would say this, and I hope this gets clipped and published. If I had all the aggregators in this room right now, I would say the number one most important thing that you need to do in the next 12 months is build the most robust APIs. APIs in and APIs out. Because all of the agents and all the things that everyone's talking about at all these conferences, none of them work without APIs. You can, like, I don't care what anyone says. If you actually knew what an AI agent was, you wouldn't be thinking that you don't need APIs for that. There's some people that I heard, some people that have technology companies saying that, oh yeah, APIs are going to be irrelevant because like agents are going to be able to do things in the web browser. Like, you can already do web browser based things. You can write Python scripts to automate web browser tasks. There's a whole range of things. And our CTO made a post about it today, actually. But Agents require access to tools. Those tools are in the form of APIs to take actions or complete tasks. If your system, your aggregator system, doesn't have something as simple as a create lead API, an update lead API, so for more information.
That one is the biggest one. That was
updates
the one that
API.
we struggled with. Yep.
And then a documents API. Like if you don't have those three simple things for all of the fields in your system, like good luck in the next 12, 24, 36 months. That should be like for whatever, if you're trying to build a serviceability calculator to compete with Quickly, right? If you're trying to do that, you are wasting your time.
In which
you're not going to convince
13,000.
But you're not going to get 13,000 brokers to all of a sudden tomorrow decide that they want to use yours and not Quickly. They're comfortable with it. All you need to do is build core functionality of the platform, have some robust APIs, and then collaborate with people who are building cool technology, whether it's a policy research tool, whether it's a serviceability tool like Quickly and some of the other stuff they're building, whether it's Halo, whether it's Sherlock and Stride and like all these other guys that are building some cool stuff. Now, ultimately, there's going to be some people that are competing with each other, you know, like just like in some ways we compete with like whether it's Middle or Maestro or like whatever. But like if there was a way for me to collaborate with those guys, I would consider it, you know. We don't have exactly the same product.
We're doing that right now with our CRM system. We're going to a new CRM system. And we're not asking our aggregator, we're telling our aggregator because your current CRM system's slowing our business down. So
I don't think they realize that. I think they got their heads in the sand. I really do.
But I would love, just like you said, to have every single major aggregator sit down at a round table and discuss problems that affect all of the aggregators and all of the brokers. But I made a post about that months ago regarding banks, that all these dickhead credit policy managers in the major banks are all stuck in rooms from 20 years ago with their thinking, and they should be sitting down with top brokers and brokerages in the industry and actually listening to because we're the closest to the customer every time. What are you seeing in the market? What do we need to change? But that will never happen.
I realized how doomed our industry was when once we saw the head of a major bank at an asset finance awards night talk about some exciting changes that they've got. They were a sponsor of the particular awards night, major sponsor, and they got up and announced that, you know, they got some really exciting changes to their system and they were going to allow e-signing. Like this was only a couple of years ago. And I was like, oh my God. Like our industry, if these are the leaders in our industry, we are doomed, because the reality of it is...
We're bringing DocuSign in and it's like, fucking congratulations.
Yeah, you're 10 years behind. You're 10 years behind the rest of the world. And that's the same. Like they're all talking about AI this and AI that. Like you don't even have a documents API, or you don't even have an updates API. Like you need to start there, brother. Like you need to start there. And I do think that there should be more technology roundtables, and I think they should be getting all the platforms, not just me. Don't have to listen to me. Get anyone who knows half of what they're talking about in technology. Get our CTO. Get all the great CTOs at all these businesses and do a roundtable and talk about what is actually going to be meaningful for the industry. Get the players, like get Next Gen in a room. Get these are like, I would call them like critical infrastructure businesses. Get the aggregators, like for the sake of our industry, all of them need to put their egos aside, because like literally, I don't care if people use my
like a weekend summit every 3 to 6 months.
Yeah, I don't care if people adopt Halo or not. We built the platform. It's already built. It's already delivering value for a whole bunch of people. I don't care if like this aggregator or that aggregator doesn't adopt it or does adopt it. It doesn't change that we already have a successful business. That was value add to the rest of our mortgage brokers that asked for it. So we're happy. Like, you know what I mean? We've already set out and we've built the most advanced onboarding platform for a mortgage for a customer. There's international applications of that. Like New Zealand is frothing on Halo. Like, sweet. Australia doesn't want it. Aggregators can't get their egos in check. No problem. Like New Zealand will take it. So
New Zealand, well,
so too will the US. Like we're talking to companies in the US about Halo. Like if there's an ego thing there, it's only gonna end up hurting the brokers, and that's all I care about. Like aggregators, if they actually understand that a thriving broker means a thriving aggregator, as soon as they learn that, and some of them know that, right? That's why they're thriving.
But a lot don't, and it's just
Yeah.
In my head, it's backwards. I'm like,
Anyway, it was very interesting to see the reactions to it and like just paying attention to those things. Lots of brokers messaged me about it, but they didn't like the post or didn't comment on the post.
Yeah, they won't. Yeah.
And it's because it might seem like they're disrespecting the aggregator. So I do get it. I do understand it.
And I understand that. I get countless messages, phone calls from lenders as such, not just brokers. Especially my DMs every time I do a pretty, how are you going post? And I'm like, oh, thank you. Or thanks for bringing that out, or thanks, for calling out that bullshit. I think everyone needs to stand for something, and stand against something. And I'm just vocal about what I stand for and what I stand against. But at the end of the day, everything I do is because I'm trying to improve the industry in some way. And I don't like bad behavior, and I'll call out bad behavior when I see it.
Yeah, well, I think anyone who looks at that Black Friday thing and can't see that it's at least problematic.
It's not illegal,
Yeah.
but it's morally and ethically questionable across the whole thing.
It's trying to generate like an impulse buy.
Especially when it's mortgage. I understand maybe if an asset lender or something did something like that, that's all right maybe for a little bit of time because you're competing against dealerships there. That I can kind of understand, but when it's bank and when it's a 30-year, potentially a 30-year commitment, and it's a credit product, you can't, I understand Harvey Norman's doing a flash sale on TVs, but I don't understand a credit product being advertised and marketed. And the broker even said, this is just great marketing. It caught your attention to make a post about it.
Well, I don't know what to say to that. It's like, if you can't see that that's potentially problematic and admit that it's at least potentially problematic, it's stuff like that catches the eye of the regulator. And
I make a lot of posts about that.
Do we want more regulatory scrutiny? Like, I don't. Fucking hell. Like, who does?
Look at years ago when accountants got slammed and the overhaul with accountancy and financial advice got done. Look how many financial advisors overnight left the industry because they went broke because they couldn't do what, some of these guys had, 20, 30-year careers down the drain. But if you look, 5 years, 10 years, 15 years behind that, if people were actually just doing the right thing to begin with, the regulators wouldn't be looking. And the next 10 years in lending is going to get scary. Yeah. Not in a good way. Potentially,
there's definitely a lot of disruption coming, and for those that are ready to adapt and ready to kind of stay on their toes, I think it's going to present great opportunities. For those who want to do things the way they've always done and keep using fax machines and snail mail and all that kind of stuff.
Blinders are on. You got to learn how to pivot and when to pivot and know when to just give up on something and change.
Well, brother, I'm very grateful, that you came to do this with me. It's been a long time coming. I'm looking forward to doing this.
It's been nearly 6 months, backwards and forwards, trying to make our schedules
work. Yeah. Well, I think, it'd be good to do this. Like, let's, pencil in a date and almost like use it as like here's where we were, here's where we are now, and look forward to doing it again with you sometime in the next couple of years.
Hopefully we don't get any calls with aggregators or banks after this.
Oh no, I'm ready for it. I'm ready. I want all the smoke.
Come, brother,
in the best kind of way. Yeah. I'm not looking for trouble with aggregators. No. I love aggregators. I think I
love lenders. I love aggregators, but
I think they form a critical part of the industry, but where our industry is going to face significant disruption if they just keep doing things the way they've always done it. So. Thank you, brother. Appreciate it.